Date from Black Knight. We need to talk about Ashford Hospitality Trust, and we need to translate some Fed speak. Folks, this is the daily financial news for Tuesday, July 11th. I hope you're having an amazing day. Go make some memories, and of course, don't forget to do the work. Alrighty, folks, let's get into some update from Black Knight. Black Knight has put out some data about home prices, and yeah, I think they're pretty shocking. Did you know that new listings are down 25% year on year? All of this is with 6% interest rates. And then lastly, home prices are up year on year. So think about that. Home prices are up. These are national numbers. Home prices are up. New listings are down 25%. And all of that is from 6% mortgage rates. If you've been watching this channel for any length of time, you know the first time we got to 6% mortgage rates last summer, the market crashed, frankly. Transactions fell off a cliff. What we are seeing now, and is evidence, not an opinion, we have evidence from May, is 6% is now accepted by buyers. The first time we got to 6%, it was a revolt. Now, based on the May numbers, and again, median home price being up as reported by Black Knight, we now know that 6% is accepted. My question for you and the question for us for the next 6 months is, will 7% become accepted? Now, I stand by my earlier discussions with you where the luxury market is separate. That market is clearly hurting and will hurt some more. However, at the median and below, I think is still on fire. There's not enough inventory. Builders are coming to that market, but as of yet, they are still not building enough inventory. Black Knight is reporting that bidding wars are back. Bidding wars are back. We've heard from Beth and Adrian and Omar that this is truly going on in the industry. Frankly, many of you are telling me about bidding wars you are involved in. There is one market, according to Black Knight, that has active inventory above 2019. Why is 2019 important? 2019 is important because it's before the craziness of the pandemic. That one market, of course, is Austin, Texas. Austin, Texas, if you remember earlier in the week from Lance Lambert's share, that is the only market in the top 100 that was down month on month. Austin had a lot of migration, rise in prices. Now there is some give back clearly going on in Austin. So yes, folks, Black Knight is reporting that home prices are up year on year. That is hard to believe. Again, I'm calling for a flat market for the year, but we shall see going forward. Yes, Black Knight is up. How about Ashford Hospitality Trust? Get ready for more and more and more of these. What's going on at Ashford Hospitality Trust? First and foremost, it is a REIT. It is a REIT in the hospitality space. It is giving back. It is handing the keys, if you will, to the lenders on 19 hotels. Now, why would a REIT do this? Here's the deal. Apparently, in order to maintain loan covenants for these buildings going forward, Ashford Hospitality would have had to bring in $255 million and invest $80 million in upgrades. Folks, that is what I've been warning about for 6 to 9 months, the dreaded cash in refi. We are already sharing that LPs are being asked to kick in some more money from their GPs. Now we have REITs handing back. This is going to continue for quite some time. It should be noted that while Ashford Hospitality Trust gave back 19 properties, they did renew 15. What did they do there? They added in $129 million to extend the mortgage duration on 15 hotels. So clearly, they looked at their portfolio and they are creating a defense around some and letting others go. This is exactly what I think the billionaires like Billionaire Barry is doing. Billionaire Barry, of course, is the one selling 2,000 single-family homes or has sold to Invitation Homes. He is selling what is liquid so he can create a defense fund, save some assets while he lets other assets go. This is what happens as you get into a market with tighter and tighter lending. Folks, the lending environment has gone from a 4 3 or 4 months ago on a scale of 1 to 10 to a 6, and I think it is going to get harder from here, so be aware of that. So we need to translate some Fed speak. We got a lot of Fed speak this week. We had a couple yesterday. Let's talk about 2. Let's do Loretta Mester first. Loretta Mester says, we need to do more. Inflation is not 2%. That, to me, is a dangerous statement. It is, I would argue, a reckless statement. If you haven't learned over the last 18 months or so, there is a lag effect. And if Loretta Mester really believed what she said, it means to me that she is going to vote to raise rates until inflation is 2%. Now, just so we're clear, if they do that, the economy will break and it will be bad, bad, bad. Because again, if you are hiking until you get to 2% inflation and you have a lag effect of 6 to 12 months, you are going to be required to cut thereafter. This is actually what I believe the important decision will be at the end of July when the Fed meets. Again, I stand in a camp where only 8% of the experts are where they will not raise. Tomorrow is a big day. In fact, it is what I am betting on. But 92% of folks agree with Loretta that they will raise in July. I think if they raise in July, it will be looked at as a mistake in 6 months. If they raise in July, I think they are cutting rates in 9 months or less. I believe they have gotten to the terminal rate, and if they had the balls to stand pat for 12 to 18 months, we could get to the other side. I think if you keep adding stuff on top, it will become a problem. So that is Loretta Mester in her, I feel, reckless statement. How about Raphael Bostic? Raphael Bostic came out and said, we can be patient. Rate increases are working. I agree. Raphael Bostic, I think, gets it. I think you can look at the data. We'll get another cut tomorrow morning. Inflation is coming down. And again, remember, everybody's talking about core. I've been talking about core for well over a year. Core is about to get better. Housing gets better in August. It's a mathematical certainty with how they calculate the 12 months of what's going on in housing. It will get better from here. But we just have to get there, right? The time has to go by. So again, there was some Fed speak. We will get more Fed speak today in the rest of the week. How about Morningstar? I don't know if I talked about this earlier in the week, but I was so shocked by it, I wanted to make sure I hit it. Morningstar is calling for an average of 4% mortgage rates in 2025. Think about that. If you're going to have an average mortgage rate in 2025 of 4%, it means a good part of that year you have a 3 handle on mortgage rates. So while it is fun as an asset owner to think about that, I want you to step back and ask yourself one question. What has to break in the economy for us to go back to 4% mortgage rates? How low does the Fed have to go to get 4% mortgage rates? Sometimes we need to be careful what we wish for. I want to be clear. I am not wishing for 4% mortgage rates. I would frankly be happy with 6% mortgage rates for the next 3 or 4 years. Let's just Let's get to the other side and get going. Again, I read these articles, this opinion from Morningstar. Shout out Lance Lambert, our Thursday guest, for sharing it. And I almost shiver. Because again, some of us think 4% mortgage rates, hallelujah, let's go buy some homes. Just remember what has to be happening in the economy, the banking system, unemployment, whatever, to get 4% mortgage rates. Something to think about. How about Stanley Druckenmiller and Doomers? First, we're going to talk about Stanley Druckenmiller. He is obviously on the negative side. He is saying things like Silicon Valley Bank and Bed Bath & Beyond are the tip of the spear or the tip of the iceberg, meaning there are more coming. Recession will begin and be larger than average. Stocks could be flat for a decade. Unemployment will jump to over 5%, and corporate profits will fall 20%. Doom, 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 doom. I want to be very clear about something because I'm putting it out there a lot. Certainly if you follow me on Twitter, almost daily I'm calling out doomers. I want to be very clear. I am not a bull. I think there's a lot of challenges going on in the economy. In fact, I called for a recession in Q2 and was wrong. So it's not like I am some Tom Lee who's the ultimate perma bull. I see lots of problems. I see affordability in housing being a problem, right? I am not oblivious to how difficult it is out there, but where I differ, and I will die on this hill, is I do not give you permission to do nothing. That is the difference. I believe a true doomer is trying to scare you into inactivity. That is the big difference. I know it's bad out there, and I know if you do the work, you might find a great deal. I don't promise great deals. It will take lots of offers. It will take follow-up, but it is worth it. That is the difference. I am not oblivious, again, to affordability being ridiculously low. I'm not oblivious to an economy that has to have a recession at some point. However, I never will give you permission to do nothing. Recessions, bad times, when the tide goes out, whatever you want to call it, is when you can make big moves. That's what I want you to hold on to. I want you to look at a bear market. I want you to look at a recession and kick it in the balls. You can do great things. That is the difference between me and a doomer. A doomer creates daily content to scare you. I want to have real talk and encourage you, implore you, motivate you to do the work. That's all this channel is. That's all I'm trying to do. So to that end, we have a couple of really cool things coming up. If you haven't taken advantage of what will be an awesome 3-hour event this Sunday, you are truly missing out. July 16th, you will get 3 hours with Dan Bird to understand and become better stock traders. Who on this channel wouldn't like to be better at stocks? I am a horrible stock market trader. I'm emotional, and that is the last thing you want to be when trading stocks. It is why I get hurt so often. But Dan has helped me become a better trader, and I've had several successful trades in the last 12 months. He has helped me, and he will help you. For $47, you're going to get 3 hours with him. You're going to get to ask questions, and I can't stress this enough, you will get the replay and be able to watch it over and over and over again. For $47, I can't believe more haven't signed up. We do have limited space, so sign up today. And then finally, if you really understand what I'm talking about being a doomer and me not giving you permission, if you want to do the work but you're unsure, I have 2 crazy offers for you. How to Get Started One Rental at a Time is priced at $399. If you buy it today, I will give you $100 in free goodies. You could get my Buy Box Deep Dive. You can get the Mastermind. You can get the Legends of Real Estate. You can get Leveraging Debt Equity. Whatever you want. You get 2 free courses. You could think of that as $100 off or 25%, whatever. I consider it $100 in bonus stuff. And then if you really, really, really want to go deep, for a little bit longer, you could spend $7.99. You can get the How to Get Started One Rental at a Time course. You can get 30 minutes of my life, because we will talk one-on-one, which I don't do very often. And you can get over $450 in free goodies. I'm telling you, folks, you got to get ready to be ready. Now, if your thing is real estate, I can help you. If your thing is stocks or crypto or whatever it is, find that person who encourages you to do the work. And then finally, lots of you are signing up and getting these free goodies. Don't forget, perhaps the most valuable thing you will get out of this is free access to a private Facebook group with thousands of One Rental at a Time students. Post questions, introduce yourself, network. It is now such a large community. We have people networking in local markets. The Facebook group is called One Rental at a Time Works. I get dozens of people asking to join every day. I only approve students. So, get $100 in free goodies, or if you really want, get $450 in free goodies by buying one of these courses. And I hope to see you on Sunday. Sunday, only, what is that, 5 days away? Folks, take care of yourself. Again, it's tough out there. But that is when you can separate yourself, because so many people would put the heads in the sand and do nothing. Keep doing the work. And then, if you are writing disrespectful offers on days on market over 60 days, I want to congratulate you. You're doing the work. It's going to take time, follow-up, multiple offers. Keep going. Don't be discouraged. If you have a real estate agent who is not helping you, get another one. There are plenty. In fact, real estate agents are starving. So again, do the work. Do me a favor, one favor. Don't write disrespectful offers on listings less than 7 days. If it's been on the market less than 7 days, don't bother. For me, 45 days minimum is where I will start looking at writing disrespectful offers. All right, folks, have an amazing day. This was Tuesday, July 11th. Look at that. Every day we get a little bit closer to 50,000. If you don't know what this is, that is a countdown. Yes, a countdown to 50,000 subs. Like, subscribe, comments. Ask your Facebook group friends to join. Let's get to 50,000 subs fast. All right, take care. Bye.